cutting across the entire earnings pool, be it at Tata Steel or for that matter, Keystone Realtors. We're going to be chatting with Baman, Rustam, Irani in just a few seconds from now, the CMD, and talk about how their earnings have been. In fact, let me welcome him on board. Baman, to start off with, could you elaborate on the impact of the new accounting standard on your reported PAT and margins, and how should investors interpret the underlying profitability?
Well, it's a very good question, and we have moved to the percentage of completion method, which is POCM versus the project completion method, only to make it a lot more simpler for our investors to be able to understand the happenings or the happenstance at a development site. So what happens is the number of bookings that we take versus the number of amounts that we collect from the consumers versus the total cost that has been incurred for the year is what is represented, rather than waiting for the entire project, which could take anywhere up to 4 years to get completed for the investor to have a better outlook. This POCM method makes it very, very simple and easier for our consumers to understand. We've adopted it only for the newer projects that we are launching. And for the earlier projects, we'll continue with the project completion method because income tax does not allow us to shift halfway through.
And despite strong collections, operating cash flow fell 32% YOY. What drove this decline, and do you expect a rebound in H2?
So we've actually done a 50% increase in the sales over the last year's same period, and our collections have also been very, very strong. What we've done is we've also engaged a lot more into project development. We've incurred a lot more costs in terms of project construction and getting our approvals faster. So this year we've already launched 4 projects with about 4,900, I'd like to say 5,000 crores of launches, which is about 70% to 75% of our entire targeted amount that we are launching in the year. So all this is what is going to lead to a huge upside in the months to come. And as you're aware, we've had a great season so far, and these months right now, Diwali being the quarter in this quarter, as well as the last quarter of the year always being the highest grossing quarter, is what is going to drive up our collections and sales going forward.
Right. Baman, you also achieved that 46% of your full year pre-sales guidance in first half itself, right? Are you on track to meet or exceed your FY26 targets?
I'd like to not jinx myself by saying anything more, except that we're definitely on target, and as of right now, we are very confident that we'd be able to invest a delight in this case with a higher than guidance number for the year. Like I said, there are some launches yet to come in this year, which will be an encouragement for consumers to go ahead and look at the newer projects that we have.
And Mr. Irani, with around 70% of your FY26 GDV already launched, should we expect a slowdown in new launches in H2 or continued acceleration? Do you surprise on the upside?
We had guided for about 8 launches, of which 4 are already completed. And I think in this quarter itself, you'll see another 3 launches coming up, after which there will only be the last quarter. And we're hoping to excel even the number of projects launched, not only the value, but even the number of projects launched. So you will see an exciting half year ahead for us. And we at Rustam firmly believe the MMR market is in great shape as of right now. I never tire from thanking the government with regards to the infrastructure that they have created, which is what is driving this entire boost or boom out here. And the number of new corollary businesses that are growing. And you're aware that Rustam is also looking at other lines of activity in the real estate space itself to kind of bolster and boost revenues for the years ahead, actually.
Right. And with 87% roughly of upcoming projects in the mid and the mass and aspirational segment, how is it that you're seeing pricing and demand resilience?
So it's very, very, all the reports point out to only one thing, that the highest buyer base in Mumbai and MMR area is in the mid-mass and aspirational segment. Just to give you an idea, anything that's between 2.5 crores and going all the way up to about 7 crores happens to be the huge demand segment for Mumbai and MMR. And that is where 87% of our projects are. At the same point of time, you will be happy to that we're sticking to our core and working hard on our redevelopment projects, which is where you can maintain an asset-light structure and go ahead and the completion of projects takes a lower amount of initial investment and a higher amount of efforts by our teams, which we are so adept at doing. And this also allows us to explore various parts of the city. And while we have moved all the way up to about Mahim Matunga at this moment in time, we are also moving towards the city, and we're not losing any strength in our strong base markets of the western suburbs.
And can you share the intent behind the recent promoter stake sale? Was it for diversification? Should investors read it as a change?
If I was not supposed to reduce my stake below 75%, I would actually hold on to this stock. I think there are better times to come going forward, and there is a huge upside that our company will see. But it was a technical requirement, and we needed to reduce our stake to under 75%, and that was where the divestment took place.
Okay, Baman, great to have you on ET Now. Thank you so much for your time today. Good speaking with you. Just